Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me, as always, is Vivek Iyer. Well, the markets have come off the highs. The Midcap Index is in the red. It was an outperformer, but looks like some pockets are seeing some pressure. We'll discuss that and a lot more. But first up, the top headlines.
You're absolutely right. Looking at the headline indices like the Midcap Index, maybe in the red, but a lot of stocks and very vibrant screen across the broader end of the markets today. But first up, let's take a look at the headlines. The record run continues on Dalal Street. The Sensex and the Nifty gain 0.8% each. The Nifty Bank hits a fresh record high. Realty and auto and consumer durables are the big gainers, while IT drags. Midcaps too gain, but relatively underperform.
Aster DM gains more than 5% on news that the board will consider an interim and special dividend on April 12th. One of the stocks on our radar today.
Voltas surges over 8% following the Q4 FY24 business update. The company registered a significant volume growth of over 72% in the air conditioner sales during the quarter gone by, the highest for any Indian brand.
Indus Towers climbs 3% on the back of Vodafone Idea's fundraise. Brokerage firm CLSA also upgrades the stock and sets the target price at 335 rupees a share. Okay, all right, those are the top headlines that we are tracking for you. But as we were pointing out, markets, they've come off from the highs of the day. The Nifty is off around 40 points from the highs, currently trading at the 22,660 mark. And or maybe there is something wrong with my money, but I think it is at the day's high is what it is suggesting. But I will just take a look at that as well. The mid-cap index, that will come up for you on the screen. And I will just take a look at what the index is doing right now. Yes, it has come off from the highs of the day. The mid-cap index too.
Cooling off
It's a sharp fall. It's a sharp fall that we're
right.
seeing. It is at the day's low right now, so 120 points lower on that one. But yes, a lot of business updates that we've been getting, Q4 business updates, and heading into the full-fledged earnings season as well.
You're right. In fact, absolutely nothing to complain about when you're talking about the quarterly business updates. BFSI has been strong. Consumer durables, consumer goods, all of them have been quite vibrant. But in our special segment, Mid-Cap Movers, we have Hormas to take us through the mid-caps that are moving around in this session. Hormas, quite a few strong movers today.
In a day like this, when a small decline from the highest point of the day suddenly invites alarming tones, but then that's what the kind of market that we are in, isn't it? You can see the mid-cap index there down to the lowest point of the day. But as you highlighted, there are plenty of movers in the broader markets, both on the gaining and the losing side. There you can see their Info Edge, and all of these on the back of strong business updates. 9% higher for Info Edge, the best single day gain that it has had since January of 2022. Nykaa there as well, 6% higher. Godrej Properties continuing to sell homes left, right and center, as is Signature Global, and as Sonal highlighted, Prestige Estates as well, surpassing its annual guidance. Some other stocks and the battery makers are in focus today, and Exide Industries is up 16% as we speak after that tie-up between Hyundai and Kia. That is the biggest single day gain that it has seen since July of 2006. You can see the kind of moves there. Amara Raja 7.5% higher as well. Another segment that is chilling in this scorching heat is the AC manufacturers and the cooling product related stocks. Voltas at one point was up 13%, but still trading with 7.5% gains. Blue Star, Amber Enterprises, EPAC Durables, Symphony continue to pack a punch in today's trading session. Some gainers on the back of strong volumes, and Gland Pharma is topping those charts after the drug approval that it received from the US FDA, 6% higher there. PNC Infra, Tejas Networks, IRB, KNR, all of them trading with strong volumes in today's trading session. And lastly, some underperformers, some on the back of some weak business updates coming in PSU banks in there. Union Bank is one of them, 3.5% lower there, but GE Shipping and Chinese Tech 4% lower, and Cyient completes the list of losers in today's trading session. Back to you.
Okay, an interesting market, right? We have as many gainers, as many losers, of course, from the bigger names that we are talking about in the mid-cap space. But it's a good time to get a technical check on the markets. Let's welcome Ashish Kyal of Wave Strategy for just that. Ashish, good afternoon. Well, last couple of minutes have been quite interesting. We've seen that sharp fall in the mid-cap index. The Nifty also has come off from the highs. What is the chart suggesting now?
Hi, afternoon to you and all the viewers. If you look at the overall index, I think since around 10 days, Nifty has not closed below the prior day low. That's a very positive sign. I mean, the overall trend is still bullish. But having said that, buy on dips is an ideal strategy. We have rallied over the past few days, and it has been a positive sign. Bank Nifty touched lifetime highs, which is a good sign as well, because Bank Nifty was a major laggard earlier, but that touched lifetime highs, and that's a supporting sign for the up move to continue. So from as far as index is concerned, on the Nifty, Any dips from here, if we can get around 22,600, 22,590, that will be an opportunity to buy again, aiming on the upside back towards 22,720 levels. And on the downside, the support for the index is at 22,520. We can see a lot of activity on the open interest front, also on the put side at 22,500. So I think that level is going to act as an important support, and any dips until that level is intact should be used as a buying opportunity.
Thank you for that, Ashish. Ashish, any individual stocks on your radar? Anything on the buy or sell side?
On the buy side, we can clearly see Interglobe Aviation giving a very good breakout in today's session after 3-4 days of consolidation. It formed an island reversal, positive island reversal. The stock is picking up, the volumes are decent, bounced back from that 20 days average. So the overall tone looks bullish for Interglobe Aviation. Long positions can be created here. Stop loss has to be placed at 3470. Target is 3850 levels. And the next stock on the buy side is Century Textile. We can see a very strong move that happened from 1400 levels. Post that, after reaching around 1700, there was consolidation for 4 days. And again, it is breaking out on the upside, and the volumes are really picking up, which is more than the past 5-6 days of combined volume together. So overall, Century Textile looks to be positive. One can create long positions on any dips. Use stop loss of 1695 for the target of 1885 on the upside.
Okay, all right. Thank you so much, Ashish, for joining us with all those details. But we'll slip into a short break. When we return, we'll get to a conversation we had with Rebecca Liebert, who is the president and CEO of the Lubrizol Corporation, which is a wholly owned subsidiary of Berkshire Hathaway. Stay tuned for that. Welcome back. You're still tuned into Midcap Radar. Well, let's get a conversation going now. Lubrizol Corporation, which is the wholly owned subsidiary of Berkshire Hathaway. The company is in focus today. And earlier today, I spoke to Rebecca Liebert, the president and CEO of the Lubrizol Corporation. I began by asking her if the destocking and pricing pressure in the chemicals industry is behind us. Let's listen into what she had to say and a lot more.
I think that the destocking that we saw in 2023 is generally behind us, and we're starting to see that demand and supply come in balance, and we're seeing a good strong recovery.
Okay, so recovery is on its way, something that the chemicals stakeholders would definitely like. Let's talk about your plans in India, because you have committed big capex here. You have investment plans. Which are the areas where you are looking at demand coming back, or a potential demand, so to say? And which are the areas where you're looking at investing that $150 million that you had spoken about earlier?
Yeah, let me break it into some different areas for us. So our $150 million investment was for CPVC. That's used to deliver clean water to homes in India, and we're really excited about that opportunity. The investment in India in infrastructure is really fueling a lot of the demand for CPVC. Now, on top of that, the opportunity in India is broad when you think about the middle class. And Lubrizol has a great portfolio of products that are aimed at that middle class, whether it's beauty care, personal care, and many things for areas like tennis shoes and consumer products. So we're really excited about the opportunity there.
Okay, so are you in conversations with more companies here, some potential agreements that, investors or the stakeholders could look at?
There's many big brands in India that we work with, and we're super excited to see all those opportunities come to fruition.
Okay, so when you're talking about this big demand push that is coming in India specifically, can you tell us the growth plans here? $6.5 billion, that's the revenue target that generally globally Lubrizol has, if I'm not mistaken. How much would India contribute to that? How big would India be as a pie of your total revenues or growth for that matter?
India is about 10% in the region of our global revenue, and we see that growing dramatically over the years to come. We see that the opportunity to more than double our revenue in India in the next 5 years.
Okay, more than double the revenues that you have currently. When we talk about chemicals, one word that always comes up is the China theme, because that is a major in the chemicals industry. And despite whatever shutdowns or whatever headwinds that China faced, it is still continuing higher production. How do you look at China as a chemicals major? Do you think the leadership that they have will continue, or are you seeing demand going to other countries as well?
Well, China put a lot of infrastructure in the ground in the last several years, and I think that infrastructure will need to be consumed, right? The capacity coming off of that infrastructure will need to be consumed. But the great news is we have a global growing chemical demand, and over time that demand will be consumed off of those assets as other areas also start to come online. So I don't see a big issue with China demand and supply becoming in balance over the years to come as, again, additional demand comes into the marketplace.
Okay, so demand is not a problem at all when it comes to
Right.
chemicals. That was one. China's one. The other major, I would say, usage or the user of chemicals would be Europe. Do you think the issues that Europe faced earlier in terms of gas pricing and as a market, that is something which is also done away with?
I do think that Europe is going to continue to have some slowness, and we're seeing a lot of capacity in Europe come offline. But Europe, I think, also will rebalance as the global chemical industry finds its new footing, and we'll see that those value-added products produced in Europe will stay in Europe, and those that maybe are more commoditized might come from other regions of the world.
Okay, all right. What is happening in India other than the plans that you've told me? I want to understand, because you said that India is going to be the big focus point for you going forward as well. Grasim, the plant that was that commenced CPVC production, what is the progress like there? Are you looking at any more agreements entering into with the Aditya Birla Group?
Well, today we're really focused on building the plant that we've already communicated. We've had our groundbreaking. The progress on the project is going along as we expected, so we're really excited to see that project continue to move forward. Relative to other areas of focus for us in the region, we have a joint venture with Indian Oil Company for additives, and as we see more demand for cars and transportation in India, we think that's a great area for growth. So we're excited about what the potential is there.
Okay. In CPVC, you do have agreements not only with Grasim, there are other companies like Prince Pipe, somewhere you entered into an agreement back in 2020. Earlier you had it with Astral, which is the other big pipe player in the country. Are these contracts long-term contracts, or you move on once that particular project gets completed?
Well, I don't want to talk about our customer contracts in particular, but what I'll say is we are an industry leader in CPVC pipe in the region, and our brand is really strong. We really work to promote and to support those plumbers that every single day install our pipe to deliver clean water to homes in India. So our focus is really ensuring that our customers and their customers, which are the plumbers, ultimately have the product they need to do the job. And we really work to make the job of the plumber easier, because our product, our pipe, really goes together well. So that's our focus, and we do a good job with that. We'll have a lot of customers.
Okay, yeah, that we can see every other day in this listed space. We do see a lot of releases with Lubrizol mentioned there, so we do take that point. You spoke about fuel and lubricant additives and that market growing as well. We are talking a lot about electric vehicles. Do you think there'll be enough balance made here, or that could be a potential threat or a risk?
Well, look, electric vehicles are here, and we think electric vehicles have a place. But we also think that the internal combustion engine isn't going away anytime soon, particularly for heavy duty, for motorcycles, and for passenger cars. Look, you have to have a lot of infrastructure to have electric vehicles, the charging stations and all that. And over time that will build out, but it's going to take some time. And until then, we're prepared to invest and continue to support the additives market for lubricants and fuels, and that's a big push for us today.
Oh yes, and that's where you've been focusing on as well. So we were speaking about it off air as well, and I would like to ask you, because there's so much innovation happening, be it in the chemicals industry, be it other industries as well. So a lot of Indian companies have announced foray into, say, battery chemicals, other kind of chemicals. Do you think that would be the way to go, and that is something that most of the chemical companies will focus on? What are the changes that you're seeing globally? You're spearheading such a big organization. What are the changes in the chemical industries that you've seen in the last couple of years that you think would continue? Some trends that you can talk about?
Yeah, well, look, I think it's easy to say maybe we want to go into other chemicals, but our core technology is where we want to stay focused on, because we believe that there's a lot of opportunity for growth just within our core. We mentioned a little earlier about the consumer products in that mid-market. Think about the consumption in India today. It's a fraction on a per person basis of what the consumption is in other parts of the world, whether it's Europe or the US or China. So we have a tremendous opportunity as that mid-market family starts to consume at levels in other parts of the world. So we're really excited about, personal care products and well-being products for that mid-market family. We have products that go into air conditioners and refrigerators, and these are, items that I think everyone's going to want to have in India over time.
So the big consumption boom is what you are, talking about. So amongst all your markets, is India the fastest growing market? What kind of growth rates are you looking at here?
India, I would say, is our fastest growing market. We believe that there's going to be high single digits to even maybe double digits, depending on the end market segment. And with, such a large population, we think that growth is going to be here for, decades to come.
Well, a very interesting conversation there with you, Sonal. But now, as we slip into a short break, we have an announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook. This is with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth. Be it insurance, tax savings, managing your portfolio, retirement planning. There's a lot to learn and a lot to do. Whether you're in your 20s, 30s, or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to cnbc-tv18.com, and we will see you on 11th May. Well, welcome back. Like we mentioned, quite a lot of stocks that are buzzing around in the session, but the mid-cap index and the small-cap index are seeing a bit of selling pressure emerge in the last half hour. But the stock that we're looking at today is Cochin Shipyard. Cochin Shipyard actually went ahead and gave an update to the exchanges last evening, where the company said that it has signed an MSRA with the US Navy to go ahead and repair US naval vessels. On the back of that, the stock is surging in the session today, up over 5.5%. What is an MSRA? An MSRA is a Master Shipyard Repair Agreement, whereby the company says that the MSRA is a non-financial and it is already effective from April 5th, 2024. The move facilitates the repair of US naval vessels under the Military Sea Lift Command in Cochin Shipyard itself. Now, Kotak Institutional Equities has come out with a note on this particular development. What they're saying is that this particular agreement helps the company gain a foothold in what is essentially a $2.5 to $3 billion US defense shipyard repair market. So it's a significant opportunity as far as Cochin Shipyard is concerned. But however, what they're saying is that they see this particular MSRA as only the first step, which is a technical pre-qualification. They will, however, have to compete quite significantly with other large players as well for this particular development. Nevertheless, the stock is up on good volumes today.
5.5% higher. That's for Cochin Shipyard for you. But that's not alone. A lot of stocks are giving it a company. Exide, for instance, is in focus. Hyundai Motor and Kia Corp have signed an accord with Exide Energy Solutions. Sonia, up and away for the stock. What's happening here?
This is a big